Hey! Thanks for coming back to another episode of The Dirty Economist. And before we get started on our topic, which is the circular flow model, I want to ask you guys a favor. I love my little sock puppet I decided to add to this little edu-vids that I make for you guys, but I don't have a name for her. So if you would like to name the sock puppet, give me your suggestions. You guys are awesome. Okay, so the circular flow model.
My best friend, she finna, go best friend, that's my best friend, yeah, you better.
Let's go and take a look at that circular flow model. I'm gonna put it up on the screen now. So when we're looking at a circular flow model, you're gonna notice that there are two key players that make the circular flow go around, and there are two markets that those two key players kind of work in. So let's start by looking at the first key player, the businesses, sometimes called firms. So there are businesses in this circular flow, and on the other side, there's households. These are the consumers. Okay, those two markets that I was talking about, well, these business and households, they interact with each other in these two markets. There are product markets, and then there are factor markets. Factor market, also known as a resource market. So, in this market, what you see happening is that households are giving their factors of production to the businesses. Now, factors of production could be their land, or their labor, or their capital. So, anytime you work for a job, you are giving them some type of factor of production. Businesses are giving either wages, rent, interest, and this is becoming to the households their form of income. Other market, you will see that it is called a product market, and that's going to make sense here in a second too. So,
we're sorry, the number.
Let's say that a store has something that you really want. So, what you do is you take your money and you give it to the business. And in exchange, the business gives you that item that you wanted, that product. So this is where the businesses are making those goods and services or products, and you, the household, is buying them. Cool. All right, so that is the circular flow in a nutshell. Now, so I'm going to show you what maybe the United States or another mixed market economy might look like in the circular flow model. Okay, so you see you still have the two players, right? The businesses and the households. But now smack dab in the middle is the government. All of the same exchanges are still happening between the households and the firms or businesses, but now there's a little bit of a government element added. The government takes taxes, shocker, from both the households and the businesses. But in exchange, the government gives protection to the businesses through laws. Remember, voluntary exchange, please. And then to the households, they give them transfer payments. And again, these are things like Medicaid, Medicare, welfare, anything that takes tax money from us to put it into a program that can be given to somebody else. All right, get your circular flow on.